Bank of America just posted record profits and the stock is at a record high. So why does our analysis still say it's too expensive? First, how good is this bank? It earns a return on equity around 16%, and about 34 cents of every revenue dollar drops straight to operating profit. It's a money machine with the #1 deposit base in the country. So why is it so loved? 2 years ago in the regional banking scare, it fell to $26. Since then, it has more than doubled all the way to a record high near 58. Confidence is back, maybe too much of it. Here's the catch. A careful, cautious estimate of what it's worth lands near $42. The stock trades at 58. You're paying about 40% over fair value for safety, you can already see. Now, the balance sheet is genuinely a fortress. Capital well above the regulatory minimum, nearly $1 trillion in liquidity, and buybacks shrinking the share count. This is not a fragile company. It's a great one wearing an expensive price tag. Score it, and one number jumps out. Quality, moat, and balance sheet all rate near the top, but valuation, a 15 out of 100. Everything works here except the price. So how do you get to $42 for a bank earning record profits? The model is deliberately cautious. It grows revenue just 2.5% a year, normalizes the operating margin down to 28%, and discounts it all back at over 11%. That lands near 42. Now flip it. At 58, the market needs this bank to beat its best recent quarters and keep beating them with no recession and no fall in interest rates. What could prove the price wrong? A recession that spikes loan losses or interest rates falling faster than expected, which would squeeze the bank's biggest profit engine. Either one, at this price, could mean real lasting loss, and even the bulls only see about 1% a year from here. Add it up, and the lens calls it too expensive. A wonderful bank at an unforgiving price. The exact price worth paying is in the full analysis. A research judgment under a lens, not a sell signal. See the full breakdown at sursus.io. Stock analysis for modern investors.